Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to Trading Tips with ForexAnalytix. What's a Fibonacci? I'm sure you asked that question, and you know what? That's what today's video is about. What is a Fibonacci ratio or retracement, and why is it important to what we do? You know, before I even teach you how to use a Fibonacci retracement tool on your charts, I got to tell you what it is and why it's important to you. You know, experienced traders, especially technical analysts that have been trading cryptos or stocks or bonds or commodities, they use Fibonacci ratios as one of their main tools in their toolbox, looking for places to buy or sell an asset class. Well, I'm going to teach you what it is and why it is important to what you do as a trader. So before I get started, I want to say, like the video. And if you like what we do and you want to learn more about trading the markets, subscribe to the channel. And as you do that, I'll see you on the trading desk. All right, traders, welcome back to the desk. This is Blake Morrow, and now we're going to talk about who is Fibonacci, what is Fibonacci, and why it even matters to what we're doing. But as we dig into that, you got to know who Fibonacci is. First of all, Leonardo Bonacci with a B is actually Fibonacci. Yeah, actually it was a mathematician born in 1170. He died in 1240 or 1250, somewhere in that time frame. He's obviously a very prominent mathematician, but his name was Leonardo Bonacci. His name was given Fibonacci, or called Fibonacci, in 1838 by a Franco-Italian historian, and it's short for son of Bonacci. That's where Fibonacci came from. And this is all on Wikipedia, but I find that super fascinating that Leonardo Bonacci is the real name, and it's not even Fibonacci. But we all know his sequence as Fibonacci, and that's what you've been taught in school or in college, and so that's what we're going to call it. It's Fibonacci. Now, why is this important? Well, it's important because of, first of all, the sequence of numbers. So let's talk about the sequence of numbers. I actually have I have a Word document here, and I have the numbers big enough so you can hopefully see it at home from where you're at. But the numbers come in at like this. Okay, starts off with 0. Here's the sequence. 0 plus 1 equals 1. 1 plus 1 equals 2, right? 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. 5 plus 8 equals 13. 13 plus 8 equals 21. You guys are good at this. 13 plus 21 equals 34. 34 plus 21 equals 55. 55 plus 34 equals 89. And the numbers keep going and going and going and going. And the reason why this is so important is because if you take these numbers, the sequence of numbers, and you divide them into each other, you start getting the Fibonacci ratios, which are better known as the 382, the 618, the 786, and the numbers continue on and on and on. These are the main key fib numbers that I like to pay attention to. But the reason why this is also important, and I know you're probably looking at this going, well, that's a sequence of numbers, great. So why does it even matter to me? Well, what we found over time and years is Fibonacci numbers and ratios actually come in about everything, whether it's in nature, whether it's in art, whether it's in architecture, whether it's in our human bodies. The numbers and ratios come into play almost everywhere. And that's what's so fascinating. So for people that, like me, who use Fibonacci numbers and use Fibonacci ratios and quote unquote retracements, we believe that those numbers are actually embedded in our own DNA as human beings. So as a human being, I think of these numbers subconsciously, and so does the herd. Now, if you talk about the herd, which is multiples of humans, that means the market. When you put many participants in the market at the same time, we're all thinking the same thing. That's why these sequence of numbers come into play. And I'm going to prove it to you how it actually works when you apply it to the markets. But if you need further evidence of Fibonacci's, just Google search. And I pulled up a Google search bar here for you so you can see Fibonacci sequence in nature. Pull that up, right? And take a look at what you see there. You know, Fibonacci sequences happen in flowers and in seashells and in all sorts of nature. You're gonna find Fibonacci sequences in. So let's say in art, Fibonacci sequences in art. You'll see them in the Mona Lisa, different pieces of art. How about architecture? Yeah, in architecture too. You know, in you know the Parthenon in Greece. And all the Fibonacci sequences that match in there. Why? Because it's embedded in our brains, in our DNA, the way we look at things, the way we view things. If you look at the human body, okay, and you just take your hand, right? The distance between these different points in your fingers to your wrist, to your elbow, to your shoulder, all of it is a Fibonacci ratio. There are different ratios that come into play in a human body. So as I explained to you guys, it's all in human nature. And that's why in our DNA, we all think the same way to a certain extent. Now, if you've ever looked at the market and you've looked at, and we're going to look at the euro dollar, which by the way, this is an hourly chart that gives us about a month and a half, 2 months worth of data. Okay, that means every one of those little hash marks represents 1 hour. So you've got from we're filming this in May of 2021, and this is March something of 2021. This is about 2 months worth of data. Every one of these little hash marks represents 1 hour. I'm going to prove to you in the largest currency market in the world. In the largest market in the world, the currency market, in the largest currency pair, which is the euro dollar, you're going to see how these numbers actually respect the Fibonacci ratios. Why? Because it's the most amount of people all looking at the same thing, making the same emotions or having the same emotions at certain times. If you look at something, innately you're going to start thinking, hey, oh, this currency pair has gone up too much. And it should peak out around here, and it should fall. And when it gets down here, it's probably fallen enough. Well, where do you come up with those numbers, and where do you come up with those feelings? Well, again, I believe that Fibonacci ratios and retracements are all inside of our DNA. So if you're looking at the market, you know, you can say, oh, all right, the market's trending higher. Sure, I get that. The market trends higher, but it just doesn't go straight up, does it? No, it goes up, it comes down. It retraces, then it goes up again, then it comes down and it retraces, and then it goes up again, right? So it's following a trend higher. Or if you want to go micro on me in this particular chart, it goes up, comes down, goes up, retraces, goes up, retraces, goes up. You guys get my picture here, okay? So let's just take this trend of us moving higher, and I always like to explain it to people. Things don't go straight up in a linear fashion. They don't go straight down in a linear fashion either. They take a couple steps forward, then they take a step back. They take a few steps forward, then they take a step back. 3 steps forward, 2 steps back. 3 steps forward, 1 step back. 2 steps forward, 1 step back. You're going forward or you're going higher, but you're stair-stepping your way higher or stair-stepping your way lower. Typically, that's how a market will work. Well, when we reach a bottom or of a retracement, usually it comes in at some sort of, usually, a Fibonacci retracement number. So if you just take the low here of the euro, in this particular chart, again, the largest market in the world, arguably, the euro dollar, if you do that one segment, you take the low and then you go to the high. What you'll notice is we stopped and then we came down and we stopped at a 38% retracement. It's a key Fibonacci number or ratio, right? Well, let's look at the next move up. We stopped here, or we found a bottom here in May 5th. We hit a high May 11th, and we came down and we stopped. Where did it stop at? It stopped at a 618 Fibonacci retracement. So the largest market in the largest currency pair in the largest market in the world both found support, or where they stopped going down, at key Fibonacci retracement levels. And that's why Fibonacci's are so important to what we do. What makes it even more valuable is if you click on the next video, I'll show you how to actually apply them to your charts and which Fibonacci ratios and retracements are most important to your trading. So, guys, if you found this video beneficial, give us a thumbs up, subscribe to the video down below, and I'm going to see you on the next video. My name is Blake Morrow with ForexAnalytix, and you're listening to Trading Tips with ForexAnalytix.